Hey guys, welcome back. We have an important video this week. The first thing I want to do is give you an update on the portfolio's performance for the week. And as you know, I compare my portfolio to the ETF SCHD. I want to talk a little bit about why I do that. And then we're going to talk about my top performers and worst performance of the week. But most importantly, I want to share with you the four stocks that I sold this week. Normally, I don't have a lot of activity in my portfolio, but this week I sold 4 stocks. And lastly, you all know that I use a few apps for investing. I had a video about, 10 or 11 months ago about the apps that I use. I want to point out one app today and also let you know of a special Black Friday deal for that particular app. You don't want to miss that. So with that, let's get started. Hey guys, welcome back. My name is Kevin Burgess, and on this channel, we talk about dividend growth investing. So if you're new to investing, dividend stocks are a great place to start because many of them offer a less volatility, let's say, than some of the other stocks. So I think dividend investing is a great way to invest. As a matter of fact, most of my portfolio is in individual dividend paying stocks. Now, if you're new to the channel, my name is Kevin Burgess, and I've been investing for quite a number of years. But you know what's unique about my portfolio is that I am not investing as if I am totally retired. Now, I want my portfolio to continue to grow. I do have stocks that are higher yielding, but I also have stocks that are lower yielding with higher growth. And so you get to see a lot in my portfolio. It's pretty diverse. And so if you're interested in that, subscribe to the channel. I'd love to have you along for the journey. With that, let's get started. So the first thing I want to do is compare my position to SCHD. Why do I do that? First of all, it's always good to measure performance, to have some benchmark that helps us understand where we're performing, how well we're doing, how poorly we're doing, so that we can make improvements over time. SCHD is yielding 3.68%. That's actually over twice what the S&P 500 is offering. So now let's compare that to my portfolio. My portfolio has a dividend yield of 2.91%, which is almost double what the S&P 500 has, but it is short of what SCHD has. And it's because while I pick stocks that pay dividends and some of my stocks pay a higher yield, I am looking for stocks that are growing their business. I'm not looking for the highest yields out there. I'm not chasing yield. I'm looking for a total return. I'm looking for a return that comes not only from dividends, but also from the stock growth. So that's why I measure my portfolio's total return. And remember, total return is both the growth in the share price plus dividends. That is what's called the total return. So I compare my portfolio's total return to SCHD's total return. So it's looking not only at the dividend yield, not only at what the dividends are that come in, but also at what the underlying stock prices do. So now let's take a look at how the portfolio did for the week, for the month, year to date, and 1 year versus what SCHD has done over that same time frame. And you can see here that the portfolio has grown a big number for the week. It is up 3.05%. The SCHD total return is only 2.45. I say only 2.45. 2.45% is a good return for a week. But we did actually surpass that in the portfolio, went up 3.05% total return for the week. Now, for the month, we are up 1.95%, while SCHD is down 0.41%. Now, let's look at the 3-month time frame. For the last 3 months, our portfolio is up 1.28%. For the last 3 months, SCHD is down 2.18%. Looking at year to date, our year to date portfolio is up 10.29%, and I'm really pleased with that. SCHD, however, year to date total return is minus 3.28%. On the year, we are 1 year being 12 months. So 12 months of history, we're looking at 8.06% for the portfolio being up, while SCHD is actually down for the 12-month period by 3.53%. I actually have every transaction from my portfolio in Morningstar's app. It calculates for me what my total return is in my portfolio. It also tells me what the total return is for SCHD and any other stock that I'm wanting to look at. Now let's move on to our best and our worst performers this week. So looking at the top performers, you can see US Bank Corp went up tremendously this week by 10.06%. Kilroy Realty went up 8.4% for the week. Stanley Black & Decker was up 7.86%. Hess Midstream, and I have an Instagram account that I will send notes from time to time about stocks that I really like, and then maybe really quick tidbits about certain things that are happening in the market. I don't post a lot in there, but when I post, it's something that I have a lot of conviction about. A couple of months ago, I posted about Hess Midstream. So if you're interested in following that, just go to Instagram, look for Dividend Investing with Kevin, and you'll find me there. Subscribe to the Instagram account, and you'll see my posts. I don't post a lot, so don't worry about me inundating your feeds. But when I post something, it's something that I feel very confident about or have high conviction on. The worst performers were RTX Corp, which was down 2.37%, CME Group, which was down 1.7%, and Lockheed Martin, which was down 0.04%. Then what's interesting here is that I only had 3 stocks that were down for the week. So my fourth worst performer actually went up 0.25%, and that was Microsoft. So there you have it. Those are the portfolio updates for the week. Now I want to tell you which stocks I sold for the week. I think you're going to enjoy this format. So stock number 1 is Franklin Resources, ticker symbol BEN. I sold out of that position. I have unrealized gain or loss of 0. And what that means is I sold completely out of the position. I had a loss of $36.40. Now, for my portfolio, that's not a big amount. Some people will say, oh, you sold for a loss. I say, so what? It's only $36. One of the key points that I want to make is that I'm looking to reduce the number of holdings that I have in my portfolio. So stock sale number 1, Franklin Resources, ticker symbol BEN, loss of $36.40. Let's look at stock number 2. I sold out of Robert Half. I just need to reduce the number of holdings that I have. It was very small. And as you can tell on the screen here, I had a gain on that one of $26.86. So stock number 3 that I sold was Aflac. Now, this was a bigger deal for me because I had a position in Aflac, and I had gained somewhere in the 50% range on Aflac. I've been in it for a couple of years. So I decided that it was time to sell Aflac because I want to take those funds and position them for future growth. Looking at the gain or loss, the realized gain or loss is $11,261.61. Obviously, that $10 on these 2 stocks gets lost in this particular gain here. But as you can tell, I have no unrealized gains or losses left on these three stocks. What that means is I sold out completely of these 3 positions. So my 4th stock that I sold, I only sold half of it. I felt that my portfolio was a bit overweight. It has a lot of gains. And so I wanted to reduce, or let's say right size, this particular stock in my portfolio. And it is Lockheed Martin. I sold half of my position in Lockheed Martin, 65 shares. You can see that the realized gain that I got this week was $6,839. I mean, with Lockheed Martin, let's just talk about that for a second. We have wars around the world. We have people looking for security in the stock market with a lot of down days. And so I believe that this period of time for Lockheed Martin is its prime. And so as things get better, as wars cease, and as the economy begins to return, I think Lockheed Martin may see some pressure just because there will be money flowing into other areas of the market. We'll see. I don't know if that's going to be true or not, but for me, I felt it was best to get that to be about 2.5% of my portfolio. It was sitting more around 5%. So we had a big week, and let's look at the total amount of realized gains that I got this week. I got $18,101.13 in realized gains. So I'm sitting with a lot of cash in my portfolio, and I'm currently looking for ways to invest that. I'm not in a big hurry. So why am I not in a big hurry? Well, I'm getting about 5% gain or earnings from interest in my brokerage account. So if I'm just looking for the dividend piece of this, I'm getting about a 5% yield with, kind of with no risk. But I do want to get that money invested for the future. I'm looking for growth, not just for income. So, stay tuned in the next few weeks and you'll hear how I begin to invest that money. Now, lastly, I want to talk about a particular app that I use that I've actually had this app for probably over 2 years now. It is one that I use. There are currently 4 that I use. There's another one that I'm trying out. So if you think of it, maybe it's 5 total that I have. Apps for me are really important because they help me synthesize information. They give me a viewpoint that I don't have to go search for. They pull that information together for me, makes my stock research more effective, more efficient, makes my stock selection more effective. And so I really enjoy using these apps. But not everybody wants to have 4 or 5 apps that they use. They many times want 1 or maybe 2 at the most. I get that. So I want to share with you a particular Black Friday deal with one of the apps that I use. You can go back maybe a year or so in my videos. You'll see that I talk about the 4 apps that I use, and one of those is Seeking Alpha. Now, one of the things I like about Seeking Alpha is that they have a myriad of articles. So if you're looking to read about stocks, read about the market, they are a good place to go to get diverse opinions on what's going on. Because at the end of the day, we're not wanting to follow anybody. We're wanting to understand for ourselves what we believe is going on, marry that with what we want to accomplish in our portfolio, and then make our own decisions. That's who we are as dividend growth investors. So Seeking Alpha is a great place to look at various opinions and various analyses that are done by other people. And as you can see here, there's some trending articles. The first one is Warren Buffett's Berkshire Hathaway dumps billions worth of stocks. They also have analyses of individual stocks. You can see this is about Robert Half. They got one analysis that says sell. They got one that says hold. They got one that says buy, and they've got one that says strong buy. So you can read various opinions about a particular stock that you're interested in. So what is this deal that's happening? Let's take a look at it. From November 21st to December the 5th, it's a Black Friday deal. You can get Seeking Alpha premium subscription, and it'll be available for $167. That is a 30% discount. So how can you get that? You can get that in a lot of different ways, but if you use my affiliate link in the description of this video, you'll be helping out this channel because the channel will receive a few pennies from that, but it is a great deal. And if you're not convinced, let me show you one other thing. This is Robert Half again. It just happens to be the company I had pulled up. Let's look at some of the financials. Seeking Alpha, in my opinion, has one of the most user-friendly interfaces with the income statement, balance sheet, and cash flow. As you can see here, you can look at the income statement. It shows it graphically. You can hover over that and see from a graphical perspective what the revenues are, what the earnings from continuing operations are. You can just look at, and then they have several ratios down here at the bottom. Here's their payout ratio. But now let's go back up. Let's look at the balance sheet so you can flip pretty easily from the income statement to the balance sheet. You can look at their cash. You see that their cash has been growing. You can just get a good picture of the income statement and balance sheet then obviously the cash flow from Seeking Alpha, it starts with their net income, then comes down to cash from operations. Then if you go to the bottom of this, you will look at free cash flow per share. You can see how that's been growing. To me, this is one of the most user-friendly apps regarding financials, as well as dividends. I mean, let's take a look at their dividends. They talk about dividend yield, they talk about dividend growth, and dividend safety as well. And then looking at dividend history, if you're just looking to see how it's grown over time, you can look at the 1 year, 3 year, 5 year. Let's look at 10 year, and then there's a max. So you can see over time how their dividends have grown. So I find value in Seeking Alpha. I think you will too. If you're not currently subscribing to it, here's a great opportunity for you to save some money and to utilize a tool that I think is very helpful for dividend growth investors. So lastly, I want to get your thoughts about Monday night's live stream. Let me know in the comments below if you want to hear more about payout ratio, which is a metric that I use when I look at dividend growth stocks, or if you want to take some time and look at maybe my top 10 holdings or top 5 holdings in the portfolio and me talk about why I like those particular holdings. So if you want to do payout ratio, let me know that in the comments below. If you want to talk about the portfolio, let me know that as well. That'll help me kind of decide which way to go. I want to do what's most interesting for you. And so we'll go on the live stream. Obviously, we'll talk about that, but then we will get to your questions and just have a great time kicking it around on Monday night. So with that, I'm going to get out of your hair and I will see you Monday night.